When will mortgage rates go down? This is a burning question many home buyers are asking. Whether you're buying a home in San Antonio, Live Oak, Converse, Selma, doesn't matter. When will the mortgage rates go down? That's the question I keep hearing over and over again. So I wanted to get into this because we have heard some updates about mortgage rates in the past week. Now, typically I cover this part of the monthly market report along with the rest of the San Antonio housing market information. But I wanted to spend a little bit more time on this topic today because it's the first quarter's over, and it's decision time for a lot of people, and they're not seeing what they want to see for this time of year. And let's get right into it. So this past week, last Wednesday, the Fed's Jerome Powell emphasizes need for more evidence that inflation is easing before cutting rates. He says here, and I'll read you part of it, is the Fed's Reserve Jerome Powell said Wednesday it will take a while for policymakers to evaluate the current state of inflation, keeping the timing of potential interest rate cuts uncertain. Speaking specifically about stronger than expected price pressures to start the year, the central bank leader said he and his fellow officials are in no rush to ease monetary policy. On inflation, this is what he said, it's too soon to say whether the recent readings represent more than just a bump, a rise in inflation, Powell said in remarks ahead of a question and answer session at Stanford University. We do not expect that it will be appropriate to lower our policy rate until we have greater confidence that inflation is moving sustainably down toward 2%, he added. Given the strength of the economy and progress on inflation so far, we have time to let the incoming data guide our decision on policy. So at this point, they're saying no, they're not going to lower their interest rates at the government level, the Fed level. So therefore, at the banking level, interest rates may remain high. Okay, we could still see fluctuations down and up depending on what the markets do. But so far, it looks like they're not going to be cutting those rates. And if they can keep them up there, my feeling is they're going to keep them up there. Now, a quick note from Jamie Dimon, Chairman and CEO JP Morgan Chase Company, and this is what he said to his shareholders just this past week. In spite of the unsettling landscape, including last year's regional bank turmoil, the U.S. economy continues to be resilient, with consumers still spending and markets currently expect a soft landing. It is important to note that the economy is being fueled by large amounts of government deficit spending and past stimulus. There is also a growing need for increased spending as we continue transitioning to a greener economy, restructuring global supply chains, boosting military expenditure, and battling rising healthcare costs. This may lead to stickier inflation and higher rates than markets expect. Furthermore, there are downside risks to watch. Quantitative tightening is draining more than $900 billion in liquidity from the system annually, and we have never truly experienced the full effect of quantitative tightening on this scale. Plus, the ongoing wars in Ukraine and the Middle East continue to have the potential to disrupt energy and food markets, migration, and military and economic relationships. So a whole mouthful there from Jamie Dimon on why he thinks that inflation is going to stay high and interest rates are going to stay high. So if we go back and we look at some predictions from, I believe this is January 2024 predictions for interest rates, and these have all been updated. So these are older projections for interest rates. We were hoping for this 5.8 to be here by the fourth quarter. We were certainly hoping for a 6 in the third quarter, but since all of this news has come up, all these new inflation data points have been uncovered, this is one of the latest predictions for interest rates. Okay, first quarter 6.77, which is pretty much on the money. 6.63, the average of all three for the second quarter. Okay, so that's really being optimistic right there. This was the March rate projections. We may get some new rate projections, starting tomorrow, but this is what the March projections look like. Third quarter 6.4% and fourth quarter 6.2%. So that 5.99 interest rate, very psychological interest rate there, because you have a 5 in front of it. It feels better to have a 5 in front of the interest rate versus paying a 6, 6.25, something like that. But that may not happen. You can buy into a lower interest rate still, but the interest rate that we're going to be offered looks like it's going to be above the 6% mark for the rest of the year. So how that plays out in the housing market throughout the rest of the year remains to be seen. We are knocking on the door of that spring home buying season, and so we'll see what happens. I know a lot of home buyers and sellers have been sitting on their hands because they're expecting and hoping for those lower interest rates, but it just may not happen at the scale that folks are hoping for, and you may have to make plans to move on without it at this point. So hopefully that answers your questions about when mortgage rates are going to drop. Not as soon as we want them to is the short answer, but there are ways around those rates. I'm seeing massive amounts of buy downs, permanent buy downs. The concessions from seller to buyer are pretty big right now in the MLS. I don't have a screenshot for you right now. I may share some of that in the monthly market report tomorrow. So keep an eye out for that. And if you have any questions, you know where to reach me, 210-260-6617. Have a great day.